So, far North Queensland. Well, we know that there is some special times at the moment in regards to COVID-19, especially in Victoria. Things are not that good. We are all running around with face masks. The moment you go outside, you need to put some on. That certainly has an influence on the property market as well. But that is the beautiful thing about diversifying in regards to spreading your risk. All right, so officially welcome to the Property Friends live stream on the Far North Queensland update. There are lots and lots of things going on, so let's jump right in. I am going to keep it short and sharp. Any questions, please keep to the end. Happy to take questions and make this interactive. All right, as always, this is a general session. Please do your own research, talk to your advisors, and make your own decisions. I'm not giving financial advice, that's okay. Let's go first to Cairns. Well, we've been in Cairns since the early 90s and have had a lot of fun there. The city itself has grown a lot. It is fair to say that there are some issues at the current point in time. No one could foresee the dreaded lurgy or the COVID-19, and that is affecting markets everywhere. However, let's have a look at it. So Cairns rental vacancy is still between the trend rate of 2% and Untitled Chapter reported at June the rate of 0.9%. That to me is the big thing about Cairns. The rentals are very, very strong. And even in challenging times, the rent has held up and the income is there. We have heard in all the properties that we've helped our team to achieve and get on the road, we've only heard of one where a rental decrease, a rental relief was requested, and that was only for $20 a week. I've done some checking around with some agencies that we have strategic alliances with, and it seems that the general rate of requests for rent relief are only around 3%. Hello, Robert. Hi, Chris. Good to see you on the live stream. If you've got questions, feel free to put them through. I'll answer them at the end. So, the beautiful things at the Cairns market is that the rental is holding up very nicely. We've had many discussions amongst our trusted advisors about when is the Cairns market going to fire. It is interesting. It's a question that has stumped many of us because all the signs were there. We had a good building boom there with up to 7 cranes in the sky, as I call it, and it didn't fire. Now, that's how it goes. Sometimes nobody can predict the market 100%. We now have a situation that the travel restrictions and the influence that that has on the tourism industry certainly has an influence on the Cairns market as well. But that being said, it's holding up very well. The median rent is $430. That is actually up $10 from last year. This is a figure from May. The median price is $407,000, slightly down on last year. Now, these figures are pre-COVID, without the full impact of COVID, so it remains to be seen. But again, anecdotal evidence shows that the market is holding up very well. There is an influence on tourism, no question, but again, it is a bit of a mixed bag. Some restaurants, some premises are holding up very well and are well frequented still. The rent reduction seems to hover around 3%, as I was saying before, which is a very, very small figure compared to what is happening in some other markets. The loss of work seems to have been quite minimal, and that is also a reflection on our rental managers of a job well done, that where rental relief was due and proper, it was given, but it needed to be due and proper. The situation I would like to describe as it's a challenging market. From my point of view, we are going to do exactly what I'm suggesting, and that is to sit it out. The rental returns are good. Certainly at the current interest rates are doing very well, and we are going to simply wait for things to happen. Cairns has to fire. There is still bottled up demand, and as we can see with the rental vacancy rate, it is still a tight market. There is very little new development happening, which means that the demand is going to bottle up. Let's see what happens in the next 2 to 3 months with COVID and which ultimate influences this will have. But I'm very comfortable that we are certainly going to hold on. The turnaround has to come. As to when, that's the big $99 question. Okay, let's go into Townsville. Very, very interesting market. Townsville has got a rental vacancy of around 2%. Now that's on the books. I've canvassed a number of agencies. It seems that vacancy is even lower than that. It is amazing how that market has turned around. The oversupply in existing dwellings has been snapped up. And I'm not going to get ahead of myself. The median rent is now $360, which is 4.2% up on last year. The median price is $328. Now that is mainly because of older stock that was in the market that is now gone. The anecdotal evidence is that the building grant has really hit the deck, and the demand that was created both on the vacant land and on new buildings, as well as the demand that flowed through to the existing established market, is quite incredible. Even we have had to jump on land that we wanted to secure and have done that. So I see Townsville as a real winner going forward. It's going to be amazing what is going to happen there. The big advantage that Townsville really has is its multiple sources of income. As we know, a lot of the income is derived from government, be that army, be that the university, and be that the hospital. But there are also quite strong industries, and even the mining industry is somewhat recovering. There's been a huge, humongous amount of investment that's gone into Townsville, and the new stadium is just one of the examples. So the land sales is very, very strong. The building grant has certainly hit the deck, and there are good times ahead for sure. The rentals are going up. We have just finished a new dwelling, and as I will say in the next slide, the rentals are certainly going up. Townsville had, so to speak, the perfect storm. First the floods, then before that the subdued market. But it is really amazing how it's pulling up. So very exciting market. It's coming off a low base, hence it will be a great market in the next 12 to 24 months at least. Let's have a look at the dwelling that we've just completed. This is a new build completed beginning of this month. The rental was $20 more a week. That's $1,000 a year at 440 than we had estimated when we got into the deal in late 2019. Another example that the rental yield is there and that the vacancy is extremely low. It got rented within 2 days. Now, yes, we were on it. The rental agency did very well. We have great strategic alliance partners there that got in at the right time, marketed the property whilst it was going through its building inspection and rectification. And that is really the trick of setting yourselves up with the right alliance partners and having them work in with you ahead of the need, so that when the property is finished, you can pretty much right away go and have it rented. Any day vacant is a day of no income, so we obviously want to minimize that. The property is on a 12-month contract, so it doesn't get much better than that to kick it off, and that's been very much a blessing. The Townsville market is, I have to say, when I look at everything, for me, a very strong market, a market that we will do more work in, and certainly will have and have some deals coming up. So the turnaround in the market is nothing of astonishing, and it'll be a lot of fun in there. All right, let's go to Bowen. Bowen is, in one word, a challenge. And I'm not going to hold back in saying so. The rental vacancy, according to SQM, is at 0.7%. So it is very, very tight, although there is a bit of fluctuation in that market. I have also spoken with some agencies this afternoon to get confirmation and to get first-hand updates, according to which out of 1,200 houses on the rental lists, there are only 13 available. So that is the latest update, the latest and greatest, and certainly the figures speak for themselves. The occupancy has been very good, although the values have come back, which is certainly true. The median rent is $310, so rentals have gone back. That is 6% down on last year, and the median price is coming up again, which is a reflection of the rental vacancy at 5.6%. Let's talk about some anecdotal evidence. The Whitsunday, what used to be called Whitsunday Shores, the big development across the harbour, so to speak, has been bought up by a Chinese conglomerate and has been rebranded Whitsunday Paradise. Now, supposedly, there is going to be 1,100 homes in there and big investment with an AFL footy ground and so on and so forth. I wait to see that going to happen. I'd love to see it coming, but I've seen that development falling over 3 times already. So let's wait and see on that. The rental vacancies are minimal, as I was saying, and increases are certainly coming. At the moment, the established market still has better value than the new market. So the bargains are out there, but they're sitting in the established market. There has been little to no influence on COVID, due to COVID, on rentals, which is very, very good and is again a reflection of the rental vacancy that is very, very low. At the end of 2020, so at the end of this year, it is expected that due to the mining projects in the hinterland, the rail side of the business world will be putting 60 people into Bowen. So there are 16 people from Adani, which is a big mine in the hinterland, in Bowen at the moment. So the manpower is certainly going to be ramped up. Adani is in the process of constructing camps. There is another 400 people construction camp being finished as we speak. And the rail line, the rail corridor, will employ 1,200 people and house 1,200 people along the 450, 460 kilometers worth of rail corridor. So the long-term future looks certainly brighter. We need to sit that out. At the moment, that is another market where I go, the rental vacancy is low, the rents are going up. So my proposal is to, again, sit on it, which is what we are doing with our own property. The big plans that I was talking about with Whitsunday Paradise, the Facebook page is Whitsunday Paradise. You can look it up yourself. There are tremendous development plans. Apparently, the developers are not getting council approval yet for the big plans. In my view, it's a bit overdone, and I really question how you're going to fuel 1,200 people. But that remains to be seen how that will work out. And it's going to be interesting. The flow-through effect from the big projects will have to happen, so I'm quite positive about it. At the end of 2020, Adani will have 60 people additional just in Bowen, and alongside the rail corridor, there is more, as we said. Now, that's pretty much what I wanted to cover on the 3 locations. I'm going to open it up to questions now. Let's have a look also on Facebook, whether we've got anything there. There's a couple of people sitting there. Yeah, go ahead. Make my day. Any questions from the floor? Tom, you requested this session, so now is the time to have a chat. Steve, if you've got anything, Robert, Chris, Katrina. So, yeah, look, all in all, there's some challenges in the market, but the rental yields are still there. And for the markets that are a bit slower at the moment, my proposal is, and again, it's just what we're doing ourselves, is to hold and to sit it out. The turnaround has to come, no question that will come. And it is good to see that we've got the rental yields and the tight rental vacancies, because that's certainly going to keep our properties occupied. All right, it seems that, okay, there's Tom via a message. I guess I just want to gauge how your thoughts on COVID and how it will affect Cairns. Well, Tom, no question, COVID is having an influence on Cairns, but with a rental vacancy of trend 2%, and this month of the last stats are from June 0.7, is certainly not a bad sign at all. Not a bad sign at all. The projects that were in the pipeline, some of them are going ahead, yes, especially Caravonica is being constructed. There is also the hospital that is going into Edmonton. So that's on the southern side. And there is a number of other projects that are being talked about. It's fair to say that if I was a developer, I would wait a bit, and that wouldn't be a surprise to anybody to see what's happening. But the projects that are Caravonica, and I'm also hearing about a fairly large retirement complex on the southern side, multi tens of millions worth of investment. So that's certainly looking promising. Okay.
Excuse me, Uwe.
Yes.
Uwe, it's Steve.
Hi,
yeah,
Steve. How are you?
Yeah, very good. Thanks, Uwe. I was just reading on one of the Cairns, real estate guides, just about the impact of the tourist dollars, being fairly, having a fairly significant effect on the, on the rental markets, and also the values. Like, I noticed the values have been fairly flat, like in terms of real estate value and so forth.
Yes.
Yeah, I mean, do you think, what's your thoughts on that? Because obviously with our borders, well, international borders closed, it's going to have a fairly marked effect on FN Queensland, so.
Well, that's an interesting question, Steve, and I sort of covered it at the beginning a bit. The rental vacancy is still very, very tight. So there are relatively few people that have lost their jobs, and the figure of rental reductions is around 3%, as I was reporting. So whilst there is definitely a impact, no question, but Cairns is not like Port Douglas, for example, which is only reliant on tourism. So you can't have a, say, 2% rental vacancy, which is a tight market, no question, and have rents that are being paid and rents that are coming through and that have held up very nicely, thank you very much, and the market degrading too much. So I see Cairns as a market that will continue to provide fairly stable rental returns.
Yeah, yeah, that's pleasing. Very pleasing to hear.
Yeah, it's, look, I mean, as you know, I don't do anything that we don't do ourselves, so I don't suggest to do anything that we don't do ourselves. And we're certainly going to hold on to the property that we have in Cairns. Cairns has been outstanding in holding with the rental value. That's certainly true. We've given back a little bit, but it's been a very good market. Yes, it's fair to say that the value increase is to come, and I guess that's the big unknown that everybody's scratching their heads. So yeah, we'll just have to see that. Tom is saying, I think potentially, yes, international borders will be closed for a while, but hopefully the domestic travel will pick up and more people will explore their own backyard. Fully agree, Tom. I see that the Australian population will travel more inside Australia, and heck, far North Queensland is a great place to go. And certainly the Victorians quite like Cairns and the surrounding areas. So yeah, look, I am reasonably confident that the market will hold up. When looking at those three towns, there's no question that the star performer, in my mind anyway, is going to be Townsville, simply because of what it's doing at the moment, and simply because it has pressure in the market, which is due to the high amount of government income, and that's why it's largely unaffected. Okay, unless there's any other questions, I'm going to invite you to next Tuesday, 5 p.m. We're going to cover on a special project and special area, the National Disability Insurance Scheme, or NDIS, and specifically there, the Specialist Disability Accommodation. It's a niche market that is very, very interesting and giving really high yields. So make sure that you sign in for that one. The Eventbrite link is on our normal channels. Have a good one. Bye-bye.